Hey everyone, and welcome. Today we're doing something a little different. Think of it as a spring 2026 health checkup for the US housing market. We're going to take its pulse, check its vitals, and really figure out just how healthy it is as we head into the busiest time of the year. So let's get right to it. The big question that's on pretty much everyone's mind. After a chilly winter and that really nasty snowstorm back in January that slowed everything down, is the market finally starting to heat up? Well, you'll be happy to hear that the answer, based on the very latest data we have, is a huge yes. The numbers are in, and they are absolutely pointing toward a strong rebound for the spring season. So let's break down exactly what that looks like. Okay, first up in our checkup, let's check the market's pulse. We're going to look at sales activity to see, just how much energy is really flowing back into the system after that winter lull. Now, to do that, we got to talk about a key metric, pending home sales. Think of this like a sneak peek into the future. These are homes that are under contract but haven't officially sold yet. So when this number goes up, it tells us that actual sales are going to rise in the next month or two. And this is where things get really interesting. Take a look at this. Weekly pending sales just jumped to over 59,000. And that's not just a nice rebound from the winter, no. It's almost 3,000 more signed contracts than this exact same week last year. So yeah, the market's pulse? It's definitely getting stronger. So, what's the big takeaway here? Well, after that little weather-induced hiccup, buyer activity is totally back on track. And we're not just talking about recovering, we are seeing real, legitimate year-over-year growth. And that, my friends, is a fantastic sign for a healthy market. And you know what? It's not just the buyers who are getting out there. Sellers are jumping back in too. New listings are up big time, from under 54,000 this time last year to over 60,000 now. This is exactly what you want to see. Because remember, most sellers also have to buy, right? So this signals growing confidence all around. And if you need more proof, check out another one of these forward-looking metrics, mortgage purchase applications. We've had 6 straight weeks, 6, of positive year-over-year growth. And get this, 3 of those weeks had double-digit gains. It's a pretty clear sign that sales are going to keep climbing in the months ahead. All right, so the pulse is strong. That's a check. Next up in our health check, we got to look at the financial foundation. Let's talk mortgage rates. Are they helping things along, or are they kind of holding things back? The biggest story here is, well, how little story there is. It's all about stability. Despite all the headlines you might see about tariffs and inflation, rates have been remarkably steady. They've stayed in this really tight range between about 6 and 6.3%. And that kind of predictability, that's huge for buyers and sellers who are trying to make a plan. Okay, now I want to talk about something that doesn't get nearly enough attention. Mortgage spreads. Basically, it's the gap between the mortgage rate and the 10-year Treasury yield. And wow, this chart really tells the story. At the peak last year, that spread was so wide that if we had that same spread today, mortgage rates would be at, wait for it, 7.21%. But today, that spread is so much closer to normal, which is just fantastic news. Let's just put a pin in that number for a second, because it's that important. The simple fact that these spreads are getting back to normal has effectively slashed 1.2 percentage points off today's mortgage rates. That is a massive, kind of hidden benefit that's been helping affordability all year long. But, we got to be realistic here. This expert quote kind of brings us back down to earth. Most of that good news from the spreads, it's already here. It's baked in. While things are way healthier now, we can't really expect another massive drop from this one factor. We've already gotten most of the juice from that squeeze. All right, next test on the list. Let's take stock of the inventory. For a market to be truly healthy, you need that balance, right? A good balance between the number of homes for sale and the number of people out there looking to buy. Okay, so this is where it gets super fascinating. The total number of homes for sale, yeah, it's at a multi-year high, but, and this is a big but, look at the rate of growth. It has cooled off dramatically. It went from a peak of 33% year-over-year growth all the way down to just over 9% today. What does that tell us? It tells us that as more buyers are coming into the market, the supply of new homes isn't keeping up at the same pace. The market is getting tighter. So, how do you actually feel that tightening in the real world? Well, you see fewer price cuts. Last year around this time, a third of all homes on the market had their price dropped. This year, it's under 32%. Now, I know that seems like a subtle shift, but it's a really clear signal that sellers are feeling more confident because demand is finally catching up with supply. Yeah, that 1% drop, it might not sound like a game changer, but it really does point to a meaningful shift in the market's dynamics. It tells us that things are getting a little more competitive for buyers, and sellers are hitting their mark with their initial pricing much more often. So, the diagnosis is in. Our patient, the housing market, seems, well, pretty darn healthy. The pulse is strong, the financial foundation is solid, and that supply and demand balance is firming up nicely. But, every checkup has to end with a prognosis. So let's look at the road ahead and what we should be watching for next. And believe me, the week ahead is absolutely packed with things that could move the needle. We're going to be listening closely for any speeches from the Federal Reserve. We've got a new PPI inflation report coming out, plus some fresh home price data. On top of that, we'll see the latest weekly jobless claims, and of course, we'll be watching to see how the market continues to digest all this tariff news. And that really brings us to the final question, doesn't it? The market's vitals, they're undeniably strong heading into spring. This checkup shows a healthy, recovering patient. But the big question mark is, are there outside forces lurking? Could a new spike in inflation or some fallout from tariffs bring on a new fever? That's what we'll be watching. Thanks so much for joining me.